Are you a new business owner looking to purchase an existing business for more than $500,000? The SBA 7 program is likely the best funding option for you. In this video, we discuss a current client case study, the questions that he asked, the frequently asked questions that you should ask, the information, the documents that you will need to give to your bank to get you funded. Hi, I'm Mike Wright with bizfundfirst.com and Foresight Business Funding. I'm gonna hop to my screen right now and get started on what you need to know to get funding for your new business. The case study covers the questions a new client asked, as well as the additional information he needs to know as he purchases his first business. He had been around the industry as a consultant, and he identified a very good company that would help him build wealth for his family. And so all he was trying to do is find the right situation for a fair price. If you're an established business owner looking to expand or buy out other businesses, much of this information will be helpful, but we may have other financing options more suitable for you. An SBA loan can be the best way for a new business owner to buy an existing business because banks have less risk on their balance sheet because the SBA guarantees most of the business loan if things don't go as planned and there is a default. For purpose of this video, we're using the general guidelines of one of our lending partners, one of the 5 largest SBA preferred bank lenders in the country. Every situation will vary. That's why we have multiple SBA lenders and traditional lenders, including private lenders who are a little more flexible with their underwriting. But in general, this is what you can expect if you're considering business financing to purchase an existing business. The minimum business purchase price you should consider to receive fair priced financing is $500,000 with an EBITDA of around $95,000 to $100,000 a year. Here are the frequently asked questions for new business owners buying an established business. We get these from most people like you who are seeking a business loan to buy out a currently operating business. First, how long does it take to get an SBA loan funded to acquire an existing business? Typically, once we receive the proper information and documentation from you, business purchases without commercial real estate typically take 30 to 45 days to close. Businesses that include real estate will generally take 45 to 60 days because of title search, the appraisal, and environmental studies. The biggest delay in the timeline is information, documents from either the borrower or the existing business owners. And 90% of the time, it's the existing business owner. So I would highly recommend, before you submit a letter of intent to purchase the business, making sure the current owners, sellers, that they will cooperate, giving you the items you need to do proper due diligence. We'll pre-qualify you typically in 28 to 48 hours, depending on the bank. But we need financials and we need the history of the business. So we don't want to get bogged down on that right away. What FICO or credit score does the borrower need? Generally, you would need a FICO score of 620 minimum. 685 or higher just helps us get things done a lot easier, and it'll get done quicker. The lender will require credit scores from each owner that will own more than 10%. The credit history of the borrowers will be a factor, and you'll pay, and can be a factor on how much you'll pay, and it can be a factor on how quickly we can close the loan. So yes, I mean, if you identify a great business and you have 630 credit, just do it, because somebody might come in and and swipe it from you. But if you're planning ahead, yeah, and we have very good credit people. So if you're planning ahead and you're 630 credit, but you're not probably not going to get a business, or you're trying to build up cash and you have 8 months, we can boost that credit score quite a bit in 3 to 8 months. So what's the minimum loan size? Minimum loan size for us is 350,000 generally. If you want more options and lenders, you need to be over $1 million. A lot of bankers just don't want to work with smaller deals. But I would generally say, $500,000 loan, which would be, like a $750,000 purchase price, is probably where we want to be. What is the maximum loan size? SBA 7 loans have a maximum loan value of $5 million. So if you need something larger than that, we have private lenders and we have different options, such as 504 if there's real estate and we also have lenders that will blend conventional loan with the SBA loan. What if we're below the 350,000 or 5 million loan size? As I just said, we have other options, such as 504 or conventional. What are the interest rates? Bank lenders are generally prime plus 2 or 2.5%. So which, most of them are currently 10%, and that's generally a variable rate. But again, it depends on the bank. So we're probably hopefully we're at the peak of rates. And, even if you do a loan now and you're paying 10%, hopefully that will go down in the next year. If you have extremely great credit and the deal is really good, you may be able to get, 1.75 plus prime. So, you might get down to 9.5 to, 9.75, but I would count on 10. So yeah, plan on your rate being 2 to 3% above prime. A new owner, depending on your experience with the industry and things like that, and if management stays, the bank might want a little more markup and cushion to get the deal done. So if your credit is dinged up a little bit, or it's a deal that is somewhat what we call, the profitability barely covers the minimum, those rates are going to go up, and they could go as high as 3 above prime for most of our lenders. How much money do I have to use as a down payment or a cash infusion? If the deal does not include real estate, you typically need 20% cash to infuse into the deal. Typically, a new franchise deal will need 20% down. If the deal includes business real estate, the minimum should be 10%. Again, there's other factors such as DSCR and things like that, or if your credit's somewhat borderline, the bank can ask for more money. But generally, if you have real estate, it'll be 10%. And they'll want to see 5% cash from the buyer. If you're doing a seller note, the bank will want the note to match the duration of the loan. So if it's a 10-year, SBA loan, they'll want a 10-year seller note, and it'll be subordinated to the SBA loan. What's the length or term of the loan? If you're purchasing a business that does not include real estate, the loan is for the business, equipment, working capital. Generally, it will be a 10-year loan. If you can purchase business real estate with the business, the amortization is typically 25 years. So, if it's usually a better deal especially for a new business owner, if you can get the real estate. The bank, banks love collateral, and there's no better collateral than real estate. So it helps you get, the deal to go through easier. It gives you, generally gives you better terms, less down payment, longer amortization. So typically your payments will be less upfront. And if you want to pay it off early, you can do that. There's usually like a 3-year prepayment. So if you're starting a new franchise, typically you need 20% down, and that will be a 10-year loan. What are the restricted industries or industries to avoid? They want to, and this one kind of is real estate investment firms when the property will be held for investment purposes. This one can get gray depending on the lender. So if you're buying an apartment building or senior living, things like that, we may be able to use SBA 7. So give us a call. We may use a different program for that. Rates be probably similar. If you're in speculative activities, oil, commodities, futures, those are usually excluded. Rare coins, stamps, banks, finance companies, leasing companies, insurance companies, pyramid sales plans. I don't like using that word, but multi-level marketing type businesses generally will not get funding through the SBA. Gambling, legal gambling, illegal gambling, that's excluded. Charitable, religious, consumer marketing cooperatives, churches. Even though, it's not a restricted industry, lending on hotels is very difficult. We have lenders that are doing hotels and even new construction on hotels, but you must be patient. They're being very picky. You can still get good terms, but once, if there's an industry most banks don't want, then you take away competition and it just slows everything down. How long should the financial history be of the company? The business, should have at least a 3-year track record. The longer the business has been around and the more profitable, the quicker and easier it is to obtain financing. It calms the nerves of the bankers. Look at it through the lens of a credit committee. They're looking for things that could, they want to make money and they want to do deals, but they're looking at everything that could go wrong. And, if there's 5 of those things that could go wrong, we need to offset those with, strong cash flow, real estate assets, things like that to, put your deal in the win column. So how do I know if the business is making enough money? Different lenders have different requirements, but in this case study, the most recent year should be profitable. This is through, one of the largest SBA banks in the country. If not, they will consider that a business that's been, bruised and dinged up, especially since what we've just gone through in the past 3 years. They obviously prefer it, has been profitable all 3 years or 10 years without any hiccups. That's great. But if there was a hiccup, they want to see kind of a turnaround, the trend is looking up, and then the deal should be okay. They're looking for profits net of expenses. So you can use EBITDA, seller-based earnings is also often used. One of those two numbers will need to be 120% higher or a factor of 1.2 factor higher than the cost of the debt, or the debt service coverage ratio needs to be typically 1.2. We have some banks that'll do 1.15, but again, that will slow things down because things have to look, that everything else has to look really good. So if you have a loan payment of $10,000 a month, the business would need income or EBITDA of $12,000 a month minimum. And like everything else, the more cushion you have, the quicker the loan will get underwritten and the more likely you get funded. This sounds like common sense. I know I've said it about 4 times, but let me say it, the better financials, the higher the debt service coverage ratio, the better the cash reserves, the better the collateral or real estate, the quicker and more likely you will get funded with better terms. What is a full financial package? Because when we ask for documents, we'll say, hey, do you have a full financial package? And most new buyers will just say, what is that? So for an SBA loan, there's an application. We don't necessarily need this if you haven't identified your business, but you can fill it out because you eventually you'll need it. So SBA form 1919, and then you give that to us. Financial statements. They'll need a personal financial statement up front. We don't need a 413, but the bank will ask for your personal financial statement to be on that form, and they always will ask for it to be signed regardless. Business financial statements, profit and loss statement, projected financial statements, current balance sheet and profit and loss statement, federal income tax returns for the previous 3 years. And I would say, income tax returns, and they will also want the financials because they will match them up to see if there's any discrepancies. Your proposed bill of sale, letter of intent, offer letter, however you want to phrase that. The asking price with a schedule of the inventory, the equipment, furniture, fixtures, any assets that are coming along with that. And that's very helpful to look at the cash flow, but anything extra definitely helps get it done quicker. If it's a franchise, if you're a jobber, are there any licensing agreements? They'll want to see those. Proof of equity injection. So that's usually, you send your bank statement or savings statement to show that you'll have funds. And this isn't not all this is needed right up front, but the more you have and the quicker we get it, the sooner it'll get done. A business plan. So if it's an operating business, this isn't as vital, but if you're a new business owner, their question, if you're buying a successful business, their main question is, will you be able to duplicate their success? So if you can keep existing management on for a couple of years, if you have experience in that industry, those are all key factors to help the credit committee to decide, whether it's a good risk for them or a bad risk. So that's basically it. You can go to our website, bizfundfirst.com, SBA 7. And most, it's pretty much a transcript of this video, but you can also acquire your forms from there, things like that. If you have questions, please schedule a call, 317-589-0118, or you can go to our website, bizfundfirst.com/schedule. You can also text SBA New Biz to 317-676-6726 with your email address, and we'll follow up with you. And in the meantime, if you have any questions, we're here to help. We love lending to all types of businesses. We enjoy, especially, new business owners. We like to help get them started. And then, if there's bumps along the ways, we enjoy being able to help you out of those. That's kind of why we, yes, we're in business for profit, but that's the fun part of our business. Thank you for watching my video. If you liked it, please click the like button. If you'd like to receive notifications on our business funding, financing updates, please click subscribe to our channel. We usually put a video out, 1, 2, or 3 videos a week, and we try to make it diversified so it's different lending topics. This has been Mike Wright with Foresight Business Funding. Have a great day.